Afternoon, everyone, and welcome back to everyone on this Thursday, the 16th, April 2020. Haven't done one of these for a couple of weeks, had a bit of a break. Uh, However, lots bit of a break in the markets. I had a bit of a breath, pullbacks in the stock market, pullbacks in currency pairs, wave falls, ABC patterns, a lot of them. And we can see that trend across the board, right from currencies, equities, and even cryptocurrencies, funnily enough. These pullbacks. So now looking to get into these wave fives to play that further and last wave of momentum to the downside in most of them. Pretty much all of them, except a few dollar pairs. So we have a glass of water here. Start here. The trade that I took yesterday, this is Aussie yen, short. You can see I entered it here on this candle there as we had this clear lower low, lower high developing. High, next high, lower high, lower low, previous low, or if you want to call this, I guess that is the low, so it is a higher low. But you can see here it failed to push higher, and I took it on the break of the 1 hour 50 here. However, this candle closed and didn't end up breaking, closing with a break of it that hour. The next hour it did. But you know that in hindsight, sometimes when the momentum comes in, I give it a few candles, and you can see here that's exactly what I did. I wanted to see a bit more development, and I waited for this break here, and it's clear. Now it got in there, and then it pulled back and then dropped, and it's running pretty nicely at the moment. So that's Aussie yen, short SBO. So it's a swing trade. We're looking to hold this probably a couple of weeks, I'd say, depending how fast the momentum comes in. But here you can see this daily chart for wave 4 pullback A, B, C. Entered there on this bearish engulfing. Looking to play it way down here to this Fibonacci extension at 0.618, which also lines up with this support that I have drawn in at around 60 level. But perfectly, this candle rejected 59.9. And that is a 14% potential trade. So absolutely ridiculous returns considering how much you get, well, everywhere. So today I'm looking potentially, if we get this pullback, wait to see what happens and I'll look for a potential entry. However, there are a lot of other trades, so I'm going to be very, very picky. I'm in 3 trades currently with 1 bulletproofed. So I only count it as 2 because there's only 2% of risk on the table. So looking to potentially take in 1 more. I don't like risking more than 3% at a time. However, if these fail, I'll be looking to bulletproof them. Most probably once we've had the breakout of this rising ascending trend line, probably tomorrow morning. So I'll go through the other pairs I'm in. This is Aussie dollar. Similar thing, except we didn't have this 4-hour development. We just had a higher high, no lower high, it just went bang. And same thing, I waited and waited and saw this momentum coming in and entered it as it was breaking this 1 hour 50 for an SBO. Higher time frames. So this is with the trend, and the probability of trades working out with the trend compared to against the trend is far better. So these are the times to make the most of these opportunities when you're trading these large wave 5 moves to the downside and everything's coming together across the world. The Australian dollar's weak at the moment. A lot of places in the world, same thing, restrictions here. Mass unemployment, however, today the numbers came out actually lower unemployment, which I find really hard to believe. I think it's a bit rigged. I can't see how that's true. We have social services here, Centrelink they're called, and there's been massive lines. So I think that's a lie just to prop up the market, prop up the Aussie dollar. So same thing, same with Aussie yen, targeting these wave 5s. So I'm going to be a bit quicker now, guys, because they're all pretty similar. So entry, the break of the 1 hour, targeting around 14%. Similar thing, what if it pulls back? See how it reacts, potential for another entry there. However, if it pulls back from here, that'll be an IBOC, which aren't the greatest, about 50% probability. However, the trend is on your side rather than against, so that increases the probability. Kiwi yen, same thing, except this was an IBOC. And see, price clearly broke down, lower low, previous low, lower high, previous high. Yes, it was holding and stalling on this 4 hour, so I class this as an IBOC, as it's a rejection. Come down, push up next bar, inverted hammer. If we look in here, it's like a low test, but you can see here it closed bearish. That's a hammer, bearish engulfing, and then continued. So I wouldn't be surprised if it pulls back into this area and potentially look for another entry, but we'll see. Same thing again. My risk tolerance has only one trade left. There's only room for one trade. So that's the 3 running positions. Sorry, quick look at the higher time frames. Wave 1, 2, 3, 4, A, B, C. Entered it here. Targeting back down here for this support. Fibonacci extension, funnily enough, is a bit lower. Okay, I'm going to be pretty fast now. Trades for potential entries today. Aussie Swiss, same thing, bearish, double tops, pulls back from here, IBOC, offering great return. Want to wait for a nice rejection, however, otherwise it'll just may drop from there. Aussie Kiwi, nothing on that yet. It's potential development, and see it rising, potentially squeezing in this ascending triangle. Looking to see if it breaks down, and it'll just be a quick against the trend trade, or is it? Yeah, it is against the trend. We've had this massive bullish breakout, so I'll probably wave 1, wave 2, so it's a wave 2, so it's a pullback. So I'd be targeting no more than this 4 hour, but it's offering pretty good risk to reward, around 6%. CAD Swiss, CBO, break retest of the 4 hour 50, break out of this ascending trend line, same thing, and see on a 1 hour chart. Breakdown, clear lower low, previous lows, high, wait for this lower high to be printed, A, B, C, wave 1, wave 2, and then let's see what happens, wave about 3% on that one. CAD Yen, don't like this 4 hour trend line it's holding, so there's a bit of a risk and it hasn't made a clear lower low, see, low, high low, bullish divergence, a bit trappy. I'm waiting for more development on that. There's better ones out there. Euro Aussie. Was looking to take an entry around here, however, I like to see 3 rejections. and it failed to give me that. So based on my rules, I didn't take the trade. Potentially, this could have been a rejection. Treat it more as a zone, I guess. As you see here, the open and close prices are just near those wicks. So, but it's fine. I'm already in 3 trades. I was offering decent risk to reward up to that 4-hour 50, however. Now looking for a potential IBO almost C, but currently IBO B. So it actually hasn't quite rejected this 4-hour 50 yet. Great risk to reward, 12.7%. It needs more development. Yellow, more development. Red, ready to go. Green, and my current money positions. So this is EuroCAD CBO. Break of this 4-hour 50. Look for this retest. Look for a nice rejection. Also lines up descending trend line. 0.382, 50 MA. Almost 6%. Clear, high, previous high consolidation. Euro pound. This is something I'm really liking the look of. Needs more development. Broke out of this structure, came back down. Not really a structure, but see the price action pretty aggressive to the upside. Now it's pulled back. 1-hour chart, you can see holding this support, which is also on a daily chart, starting to form in this descending triangle. I'd like to see a bit more development in this pattern here, and then look to get a rejection of this support with momentum. Look to take it on a 5-minute break and close with volume, or ideally higher volume. This is a Euro pound, so London session, 5 p.m. Sydney time, and just look, that's a massive trade, potential 35%. If you look here on a higher time frame, this is why I'm looking to target that high. Look at this huge wave 1, or is it wave 1, wave 2, wave 3? That's not really a pullback, potentially massive wave 1. I don't know. Clear double bottom, pullback relative to this breakout here, and funnily enough, around 0.618 Fibonacci. So 61.8% pullback. So looking to target back around these highs as far as 94 on a weekly chart. However, that's my max target. More likely to look, first target would be the next daily highs. So 94, 904. Next target a bit higher, and then way up there. Just actively manage it day by day. Longer term trades I manage usually from the 4-hour chart if they are with the trend, and this is with the trend. And as my profits start to increase, I start to become a bit more aggressive in terms of my management. So rather than trailing the 4-hour, so I'm running 5 to 10%, I'll start to trail the 1-hour and any sort of bullish price action, change of trend. So, double bottoms, higher low. I'm going to be looking to close that out because I like to take profit rather than hold something and hold, and it pulls back massive percentages on you. Prefer to take profit, and look, if the overall trend is correct, eventually it'll have a breath, which is it's doing, and then it'll continue with the overall trend, and I'd look for a potential re-entry to it with profit already locked in. So I prefer to trade that way. So next we have Euro Kiwi. I was looking at for a potential position on that yesterday, but I just liked the others better. And you can see it was still holding underneath its descending trend line. How much weight you put on it, because it is with the trend. That's up to you. I place more emphasis on raw price action first. Then I use trend lines, support levels. Support resistance is important. Trend lines, not always. This one, yes, because it did hold it pretty well. 1, 2, 3, 4, 5 times. However, you can see with this push of momentum, it's what trading requires sometimes is a bit of a discretion. You look at the overall trade bias. If you look here on the higher time frames, not a clear bullish trend. Right. Clear breakout, high, pullback, perfectly lining up with this 50 daily support, which also lines up here as resistance back here in 2015, and there's some others back here in the past. See here on the monthly. I want to zoom back that far. So wave 1, wave 2, is this a wave 3? Yeah, it could be. You can see here before the last crash, 07, and this aggressive movement. So sorry about that. So, it's just beginning now. We've had 3 bullish months. It's rejecting here. Could it return back to these sort of highs? I don't know. Maybe up to there. So it offers a great return. And sometimes you risk 1% to make around, 5+%. Well, that's fine. It's all probability. You build the puzzle, you see the missing pieces, and you weigh it up whether or not it's worth taking that 1% risk. Kiwi Swiss, CBO, break of the 4-hour, look for a retest rejection, offering around 7%. Kiwi dollar, same thing. CBO broke, retest the 4 and 1 hour 50, 0.382 fib. Wait for a retest, look for a rejection, target back down around these lows at 55.6. Dollar CAD, 5.5% position, clear high, breakout, previous highs low. Look for it to make a higher low, reject, target back up near the highs. That's the first level. You could push it a bit higher if you wanted, but that's high enough for me. Dollar Singapore, US dollar and Singapore dollar, similar. Clear break of this trend line, clear high, previous high low. Wait for it to make a higher low, which it already has, so it's it being a CBO, it's fully confirmed. Trend on for 4 and 1 hour is now bullish, whereas an IBO, usually only the 1 hour trend is confirmed bullish, and the 4 hour needs more development, you'll find, except if it's an IBOA, which this, well, it was because it did have double bottoms here. There's a little bit of sort of rejections going on here. So maybe an IBOA. Bullish divergence. Nice break. Now, dollar oil, this needs more development. One rejection. Wait for a second. Wait for a third. Wait for it to make some sort of pattern. And then looking to take it bullish with momentum. And also see, look, bullish divergence. Ever since this low here, we've had all lower lows, but this line has been higher than it was there, therefore bullish divergence. So the bearish momentum starting to slow down. So it starts forming into a pattern, usually. And then you just wait for it to develop until the bulls have patiently waited long enough, and they'll just go bang and take it straight up to the upside. And if you get in right near the bottom, that's the areas that offer the best return relative to your risk. So that's pretty quick, guys. Let's go here, DXY dollar. Funnily enough, holding the trend line, clear break. Looking for this to continue bullish, which matches up with the dollar pairs. Stock market, we've had these wave 1, 2, 3, 4 complex pullback. And this Elliott wave 4, A, B, C. Now just looking to see potential SBO, whether it has broken higher than the 4 hour. So I'm not 100%, I don't really like that part of it, but I like this. Return, not the best really. I know how I'm saying it, but compared to some of those currency pairs you saw, 7% on the stock market when the Federal Reserve is pumping trillions of dollars into it. So it's hard to compete with that. It's rigged in a way. I prefer not to risk my capital. Plus, I'm already in a ETF inverse of the stock market anyway, which I'm holding. Now, anything else? I'll quickly go through my ETFs. So, I'm in SPXU. I bought spot board here. It's dropped about 20-30%, 25%. But, I'm betting against the economy basically. Well, the economy isn't the stock market, but against the stock market. Like, there's only so long it can contain this, and it's artificial, it's fake. It'll all come crashing down. The more they prop it up, the harder the fall, basically. Took around 18 months for the last recession from the top to the bottom. If we go here, we'll see last recession, the top was in October of 07, and the bottom was in March 09, so about 18 months. Let's get it exact. So there you go, 17 months. So from the top to the bottom here would be July 2021 next year. So I reckon there's still a fair bit to go on this. It's a slow, drawn out process, but this bullish trend here is so ridiculous. This can't just be the correction and that's it. Did it there, but now that's 11 years. That's 50%. It's 50%. That was around 30. My target to here. First target, second target, third target, funnily enough, previous highs. So that's my target around there, 155. Which when you measure it is, look at that, 54%. 57%. 51%. And you see this? This movement here is 100% up, 57% down. This movement was 228% up, 57% down. Or was it 53? 53, I think. Yeah, 52. And this movement was, ready for it, 400%. So do you really think this movement's finished? 400% up and only this? I don't think so. I'd say at least 50%. Previous highs. In worst case, well, could go as low as here, even down to here. If you look back 1929, the Dow Jones fell 90%. And people are calling this a depression also. So, previous lows there, back in March of 09, 80% drop. 90% would be unreal. If it fell that far, that's the best. These guys are the best buying opportunities for your overall long-term holdings of stocks. If you can stock up, funnily enough, and you're cash rich, you can then inject your cash and buy more of these for long term. Very easy. So, do a bit of research, sign up. I use Saxo Bank, they're very good. Offer a lot of products, a lot of instruments you can gain exposure to. And guys, if you don't get your money to work for you, you'll be working for your money till the day you die. So in a capitalist society, it only makes sense that you play the game. Hate the game, not the player, as they would say. Because at the end of the day, it's you that reaps the consequences. It's everyone that reaps the consequences of their own actions, no one else. So, yeah, anyway, I won't continue with that. Get the idea. Just be open-minded to new things, guys, because I tell you what, since my journey in trading and investing, the way that I look at money is not the same as I used to, because I can see how easily it can be made, and at the same time how easily it can be lost. It comes and it goes, it flows. If you try and cram onto your money to save it, then the tap is very tight. You got to let it flow. And yes, it's important to keep a budget, keep your expenses under control and all that. But what I mean is, think bigger, guys. Think bigger. What do you think might be expensive? Yeah, that may be, but to someone else it might be cheap, and to what you may think is cheap, it might be very expensive for someone else living somewhere else in the world. So it's all relative. Money is a tool, and in a capitalist society, it can pay dividends in benefiting both you and helping others, more importantly, because helping others rewards you differently to different, very different emotion. Serving others compared to serving yourself. Anyway, so lots on the market currently, guys. Lots to look out for, especially on currencies. Stock market shaping up for those further continuation drops, both fives also. So I got tied up talking, sorry, but this is real estate inverse ETF. Bought up here, it's down currently. Same thing, massive debt. It can't sustain forever. I'm going to hold it. I risk 1%, guys, so I'm prepared to, if it goes to zero, which is unlikely, so manipulated, they'll do all they can to try and force you out. But I'm not going to sell. There is small amounts, and with but off a very very large upside. So like, look at this. I bought in here. That was 550%. And if you bought in there at the bottom, you're looking about 1,000% plus return. That is incredible, just to trade volatility. You make that in like a couple of weeks. That's the potential of this, guys. Yeah. Anyway, I'm babbling on now. So I hope you enjoyed that. Take care, guys. Trade well. Enjoy. Take care. Till next time. Peace out.